Hello from the Dukas Copy TV studio in Geneva. For the technical perspectives on the markets, I'm joined by Bruno Estier, independent technical analyst here in Geneva. Hello, Bruno.
Good morning, Daniel.
So last time you mentioned the rebound of the US market. How is it doing now?
Well, it is doing obviously pretty well. As we see, we are back to the all-time high of 2020, and we have been moving up almost without pullbacks. Now, probably the market will either extend its rise at the same speed along the red lines or allow itself a little pause, which should not move much below 1960 levels, because we see here we have the cloud level as support.
Has it gone too fast and too far up?
Probably not. If we take a longer term perspective, looking into a weekly charts over the last 2.5 years, what we see is that every time along the red lines, every time we had some spikes on the VIX on the upper panel that indicated a low, and also after that we had the momentum indicator crossing up again, and after that every time we had new highs. Therefore, we are relatively confident to expect our target of 2141 to be reached in the coming months.
Okay, so and we are pretty sure that it will not revisit the lows of 1820s?
Well, look at a measure of fear, which is the VIX index, which gives us an answer. We see that on mid-October, we had a very big spike at 31%, which was reversed almost immediately in a few days after. And then the VIX index declined below the magic 20%, which is really where things tells us that things are calm again. And now what we should expect is a rise between 14 and 17% in this little range, because we are in the seasonal favorable period from October to March.
Mm-hmm. And what is your view on Asia?
Well, in Asia, the big thing, of course, is the movement of the yen weakness following the BOJ easing. And we have here two charts. On the upper panel, we have the Nikkei. Here in the middle, we have the yen. And we see that on this 30-year chart that we are breaking the dotted rising trend line and indicating that the yen weakness is continuing. Maybe we have a chance to make a pause near this double green line, which is a support around the level of 85, which is about $115 yen. But it's not sure that it will stop there, because the momentum is still down, as we can see on the lower momentum oscillators.
And how far can the yen go?
The yen can continue to go down, and the Nikkei as well continue to go up, and we see that here here we have the yen on the top part in orange, the orange line, and here on the bottom part we have the Nikkei. The Nikkei on a weekly chart displays rising lows with a kind of a ceiling at 16,300, and that is a typical triangle pattern. This triangle pattern has, in that case, a target of 18,700. Of course, this is far away, and meanwhile, we might have some resistance from the old high in the past at 17,500 and 18,300, but we keep with our long-term target that should be only pause in the uptrends.
And what's your view outside of Japan?
Outside of Japan, not much is happening. If we look at emerging market, here on the top part of the panel, we have the dotted orange line, which is the relative strength of emerging market versus the S&P 500, and we see it is only flattening after a downtrend. That means there is no leadership from the emerging market, and what we can hope is only that they follow the US market by bottoming out after the low we've seen in mid-October.
And what trends and perspectives do you see for the European market?
Well, for Europe, this is a little bit bad news, because if we look at the dotted line on the top part of the panel, this is the relative strength of Euro stocks versus S&P 500. Unfortunately, it is going down and making new lows. And this is not good news, because that means that, number one, we might have a chance to revisit the lower Bollinger Bands around 2,900. For the Euro Stoxx 50, and that we might stay in a range 2,900, 3,100 for a little while. So really I would recommend to avoid Europe if it's possible.
And you also wanted to have a word on gold.
Oh yes, because nobody is looking at gold, but we have broken a very interesting technical levels at 1180, which has been a support for almost 1.5 years. So it's important because of the size of the pattern. It is almost a descending triangle. We see here the descending line and the flat line here. And this descending triangle has an objective around 974, which is far away. We hope, as the market is very oversold, that there might be some support around 1180, 1140, but we should keep in mind these long-term targets. So really the bulls have not anything else to look at gold, but they should look at the US and the Nikkei.
Bruno Estier, independent technical analyst, thank you for your visit and your technical analysis today.
You are welcome.
And thank you for watching. Do make sure to keep clicking back on the Tukas Copy TV website for exclusive interviews and latest analysis. Have a great day and see you next time.